Welcome back, Focus Learners. Today's explainer covers a day in the crypto markets that honestly felt like it was pulled straight out of an action-packed anime. We're talking about the hyper-paced, explosive market action of June 15th, 2026. If you've been tracking the charts, you already know the energy has been absolutely electric. Just sudden plot twists, massive breakouts, and vibrant comic book level volatility. We're going to break down exactly what drove this massive shift, from global shockwaves to major institutional power plays. So let's get into it.
Okay, let's dive right into this. $150 million. That right there is our explosive, inciting incident for the day. That is the exact amount of leveraged short positions that got violently wiped out across the market in just a matter of hours. Imagine a massive energy blast just instantly clearing the battlefield. Bears who were super confident betting on lower prices were completely caught off guard. They were forced to cover their positions in a total panic as Bitcoin rapidly charged toward the $66,000 threshold. But to really grasp why this $150 million liquidation event even happened, we have to look at the ultimate catalyst that snapped weeks of intense macroeconomic tension.
And here is that catalyst. U.S. President Donald Trump announced the completion of a peace agreement with Iran, stating that the Strait of Hormuz is officially reopening and the U.S. naval blockade is lifted. Now, this carries some absolutely massive economic implications. You see, the Strait of Hormuz handles roughly 20% of the entire world's seaborne oil trade. For weeks, the conflict over there had the global market totally holding its breath, and that drove a huge risk premium into energy prices, suppressing risk on assets like crypto. This single geopolitical announcement acted as the ultimate circuit breaker that just released all of that pent-up tension.
Let's walk through the exact combo sequence we saw on the trading floor, because it's fascinating. Step 1. The peace deal is finalized. Almost immediately, Step 2 hits. Brent and WTI crude oil prices crash by roughly 4%, falling back down toward $83 a barrel. And that directly triggers Step 3, a sudden, sharp drop in global inflation fears. We know higher oil means higher inflation, which usually forces tighter central bank policies. So with oil dropping, the fear of prolonged high interest rates finally eased. And that leads perfectly into Step 4. Capital rapidly rotates back into risk-on assets, fueling Bitcoin's relief rally straight past the $65,000 mark.
And this brilliantly illustrates a classic short squeeze in motion. When the peace deal hit the wire and prices started to tick up, those bearish traders we talked about earlier suddenly couldn't meet their margin requirements. Exchanges had to step in and forcibly close their positions. But here's the catch. To close a short, you literally have to buy the asset back. So you have all these bears forced to buy Bitcoin all at once. That creates this massive wave of artificial demand that acts like pure rocket fuel, supercharging the very rally that's wiping them out. It's a brutal, high-speed market mechanic, but it completely flipped the momentum of the entire day.
Section 1. Powering Up. Institutional Heavy Hitters.
In a massive power-up for institutional adoption, the SEC just cleared T. Rowe Price's crypto ETF for listing on the NYSE Arca. But pay close attention to the strategy here. This is an actively managed fund. Unlike the passive spot ETFs we've gotten used to that just track Bitcoin or Ethereum on their own, this specific fund has the capacity to actively trade a diversified roster of 5 to 15 different assets. We're talking key cryptos like Bitcoin, Ethereum, Solana, and notably XRP. This is a huge structural evolution, guys. It gives institutional investors a way to hand the reins over to pro portfolio managers who can dynamically navigate the market, treating crypto like a true diversified asset class. Now, what's really interesting about this next number is the sheer scale of conviction it represents. 846,842 Bitcoin. That is the new total treasury reserve for Strategy, the company formerly known as MicroStrategy. While a lot of other publicly traded companies were playing it safe this week, Strategy went ahead and dropped another $100 million to acquire 1,587 more coins at an average price of $63,024. To put that into perspective for a second, listed companies now hold about 5.6% of Bitcoin's total circulating supply. Strategy isn't just participating in the market, they are aggressively treating these price dips as a highly favorable risk-to-reward opportunity to hoard the ultimate digital collateral.
Section 2. Underdog Triumphs, Zcash and Miners.
First up in the underdog category is Zcash, which surged a massive 16.43%, easily making it the lead gainer among large-cap tokens today. So what drove the sudden breakout? Well, it wasn't just the macroeconomic tailwind. Zcash recently suffered a huge crisis of confidence because of a critical orchard pool vulnerability that really threatened the integrity of its supply. But the devs quickly patched it, and the network underwent a rigorous, AI-driven audit using an advanced Anthropic Claude model. That audit came back completely clean, confirming the patch was successful. That immediately restored network trust and brought a huge flood of buyers rushing right back into the privacy coin.
Meanwhile, down in the digital trenches, the Bitcoin network itself stepped in to save its hardest workers. The Bitcoin mining difficulty dropped by just over 10%. That is one of the largest downward adjustments in the network's entire history. Why did this happen? Well, the recent price slump, combined with high energy costs, basically forced the weakest, least efficient miners to unplug their machines. With less computing power competing on the network, the protocol automatically lowered the difficulty level. So, for the highly efficient miners who actually managed to survive the crunch, this adjustment provides incredibly rare and valuable breathing room. It mathematically makes it easier for them to find blocks and earn revenue.
Section 3. Escaping the extreme fear zone. Looking at the Crypto Fear and Greed Index, just last week we were sitting at an abysmal score of 8 out of 100. That is deep, dark panic territory. But today, thanks to the peace deal and that crazy short squeeze, the score violently jumped up to 20. Now make no mistake, a score of 20 means we are still technically inside the extreme fear zone, so we're definitely not popping champagne just yet. But the sheer velocity of that jump indicates a really sharp, sudden improvement in investor psychology. The market basically shifted from outright panic into a state of highly cautious optimism.
But here's where we need a quick reality check. Yes, the immediate price action is super exciting. Today, June 15th, spot Bitcoin ETF saw a very healthy $85.9 million in positive inflows. But you have to look at the other side of the scale. Over the previous 7 days, those exact same funds saw a staggering $316 million in total outflows. In fact, that was the 5th straight week of institutional withdrawals. What does this tell us? It means today's rally, while super powerful, has a somewhat uncertain foundation. Institutional money doesn't usually just reverse a 5-week trend in a single day. The relief is absolutely here, but that long-term conviction is still actively being tested.
Which brings us to the final high-stakes cliffhanger of this explainer. The geopolitical headwind of the Strait of Hormuz is gone, but tomorrow a new final boss fight begins, the Federal Reserve's FOMC meeting on June 16th and 17th. If the Fed looks at the data and decides to maintain a hawkish, aggressive stance on interest rates, it could instantly wipe out all the gains we saw today from the peace deal. So for all of you focused learners out there, your mission is really simple. Watch that $65,000 support level on Bitcoin like a hawk over the next 48 hours. If that level breaks, this entire relief episode might be over. But if it holds, we might just be entering a whole new arc. Keep your eyes on the data, and we'll see you in the next explainer.